So we're now going to have a look at work on digital currencies. This, over the last 5 or 6 years, has exploded as something of extreme interest in the whole digital strategy space. What I'm going to do here is we're going to talk a bit about history and then about more recent developments. So let's start off with history. Part of this whole discussion began when companies such as Facebook were issuing their own things that look like currency. One example of that was Facebook credits. And believe it or not, people at the time saw Facebook credits as something that would be an opportunity for Facebook to expand its sphere of influence well beyond what we currently know of it doing today. For instance, one commentator on payment system, David Evans, wrote that social game companies could pay developers around the world in Facebook credits, and small business people could accept Facebook credits because they could use them to buy other things that they need or reward customers with them. In some countries, especially those with national debts that are greater than their GDPs, Facebook credits could become a safer currency than the national currency. So there was actual genuine commentary from very informed people that saw Facebook credits as something big and something that was going to expand beyond Facebook. Not soon after that, within a year of that sort of concern, Facebook actually dropped its credits. It decided that these credits were not going to be of use to it and stopped issuing them. And basically, if you wanted to buy sheep on Farmville, you could use just local currency. So it wasn't having its own separate system whereby you bought Facebook credits with your local currency and then you use the credits to buy other things on the Facebook platform. We've had obviously similar things arise with regard to Bitcoin. Bitcoin was established now in 2009, launched, and has certainly taken the world's imagination by storm in a surprising way. Only a few years ago, I wondered if Bitcoin was even worth studying as a virtual currency, that it was perhaps a curiosity. The jury is still out on, there are some views on Bitcoin that it'll become a huge replacement for things like the US dollar. I suspect that is not going to happen. However, it has, like a lot of things that are an asset, led to intense increases in speculation. Here was a chart from 2009 to 2014. You can see that the price of Bitcoin, or if you want to determine it, the exchange rate between Bitcoin and the United States dollar, appreciated massively. That also looks like it's, all the way from 0 to $1,200 at a certain point. Even if we zoom in on the sort of last period there was a whole lot of volatility. That's from 2013 to 2014. It seems to capture most of it. As you can see, it's changed a lot in that time. And then even right down to the month of that time period, there was lots of volatility too. Now, lots of things drove that. There was lots of speculation. There was, at the time, issues with the banks in Cyprus, so people using Bitcoin purchases to get around capital controls if they're trying to take their money out of a country. But, that certainly got a lot of interest in the idea of virtual currencies. And Bitcoin today is still trading at a healthy amount, way above the zero price that it started with, although not at these levels. And actually, it's been, in 2015, far less volatile than it was in previous years. Other companies, such as Amazon, have also tried to introduce their currencies. I don't think the Amazon coin took off. It was a way of purchasing apps. But again, when they did so, outlets such as the Wall Street Journal thought, but in the long term, what they should perhaps be worried about is losing their monopoly on issuing money. A new breed of virtual currencies is starting to emerge, and some of the giants of the web industry, such as Amazon.com, are edging into the market. That's the Wall Street Journal, basically saying that, normal, the usual currency that we've had for 150 odd years or so might be wiped out by private currencies issued by internet companies. Now, stepping back for a moment to see if that was ever really a concern, perhaps the easiest way to think about currency is to use this following 2x2. So some currencies are distinguished on two dimensions. And some of them you have to buy in. In other words, you have to use existing currency, dollars, to purchase the other currency. And other ones, there's actually no buy-in, that you earn currency by doing other things. I'll explain that in a second. Then there's an issue of, that's how you go sort of accumulate these virtual currencies or any currency. Then the second thing is you might want to exchange your money out of there. One way to do that is to buy out, that you can convert your Facebook credits or something like that back into dollars. In other situations, they just don't allow that. Once you buy them, you can't convert them out. That actually was the case with Facebook credits, actually, unless you're a developer, in which case there was a circuitous route out of there. So what are some examples of these? Well, examples of things that you can buy in and then buy out, which look a lot like normal dollars, is, for instance, casino chips. You buy casino chips, you do stuff with them, and then if you've got any left, you take them out again. Bitcoin has that property as well. Bitcoin, you can take dollars, buy Bitcoin, take Bitcoin, buy dollars. Okay, the price of that exchange can change over time, but you can do it. In the computer games, Second Life, they used to have these things called Linden Dollars that you would buy, go into Second Life, do a whole lot of things, build yourself a bookstore or whatever people want to do in Second Life, and could earn money and take some more out. And some people actually earn money this way. Second Life isn't, so many years ago now. It's not really a thing. And then, of course, there's another situation where if you've got some US dollars, you can go to Canada here and you can buy Canadian dollars, play with it in Canada, and then if you've got any money left, or if you've earned more money, you can take it out and buy US dollars. So normal currencies sit in this space. What about all the way at the other extreme? At the other extreme, where you've got no buy-in and no buy-out, well, I'll give you an example of that. Monopoly money. It's a great example of that. You can't buy monopoly money. You can't buy it out. If you're like my kids, you can work out how to steal from the bank. That's something we don't really want going on. But nonetheless, you have these, that's currency. It does things like currency within the game, but you can't actually interact with the rest of the world by design, both ways. What's some currencies where there's no buy-in, or usually no buy-in, but there's actual ways of buying out? I take frequent flyer points as an example of that, where you earn money by doing something, but then you can take money out. Now, it's imperfect, so sometimes you can actually take cash out. Sometimes you can take almost the equivalent of cash, like an Amazon gift card or something like that, so things you were going to buy anyway. So I put that in the no buy-in but buy-out phase. In other words, you can use it to get other things that you would have wanted. And then finally, in the buy-in and no buy-out box, we've got Facebook credits. Facebook credits, you could have purchased them, but you couldn't take them out again. And a lot of these ones, like game credits for Nintendo and Sony PlayStation, other things also work that way. So they're kind of the interesting ones, because it was this focus that was all the thing regarding these ones might actually take over the space to the rest of the world. But in fact, that is unlikely to be the case. And if you read the reading, some economics of digital currencies, pure digital currencies, you can see that in that. But the prediction is, will these sort of platform-specific currencies like Facebook credits evolve into general payments? And the answer is no. And the answer is for a very simple reason, is they don't serve the needs of the platform by allowing people to take them out. Limited convertibility is the feature of those things and was intended to be the feature. And the reason is because platforms like Facebook are interested in generating more activity. And you want people to play these games. And so some people can play these games and get better at them, but just playing them a lot and earning more sheep and earning currency in the game, and off they go. Other people don't have that time, but if they can buy some sheep, they can be part of the whole Farmville community or part of the Candy Crush Saga community or whatever it's going to be, and generate more social activity. But that would be destroyed if you could earn money in the games and then take it out, because then people wouldn't be doing it for that purely social reason, and they wouldn't just be keeping their activity in the game or forced to do so. And so it wouldn't serve the needs of the platform. So making them fully convertible would actually decrease what the platform is trying to encourage. Okay? And that is why those currencies were never, ever really going to convert into something bigger, because that wasn't in the interest. In the end, they didn't actually serve that platform goal very well, and a lot of them have fallen by the wayside.